Hello, it's Big Cheds, and this is the Trading Encyclopedia Daily Education playlist on my YouTube. Cheds Trading, you can find me on Twitter at Big Cheds, and Bitcoin Live, where I'm a founding analyst. For today's lesson, we're going to talk about downtrends and the fact that it's okay to sell a downtrend. Now, there's this tendency where you're in a chart and you don't want to sell because you don't want to miss, quote unquote, the bottom. Right? You don't want to miss the bottom. What if I sell here and the price reverses up? I'm going to be really mad at myself. Well, you need to remember that every time you enter a trade, okay, it needs to be with a clearly defined idea. And if that idea fails, you bail. For example, you take a breakout here. If it breaks out but it comes back below, you need to get out of your position rather than holding, buy more here. You're holding, you buy more here, and you're in big, big, big trouble. Now, bottoms are slow to form and will often give you multiple bites at the apple. So what does that mean? So let's take, for example, the bottom that formed on Bitcoin back at the end of 2021, right? So we saw the severe price drop on Bitcoin and it started to bottom. Now we know we have the two-level filter we can look for, the diagonal break, then we wait for the horizontal. Bitcoin here gave you multiple bites at the apple. All right. You could have gotten long very easily on the break of 18.5. You could have gotten long pretty easily on the break of 21K here. You could have gotten along on the throwback to 21K, or you could have got long here on the break of the larger range at 25K. All of these were perfectly fine entries because now you're riding a trend. You see very nicely these throwbacks held. The whole idea is you want to ride the trend rather than guessing when it reverses, okay? You see price has done very, very nicely since all those entries. Now, we'll take some downtrends. We'll take, for example, like DOT. And you may be in DOT and you don't want to sell because what if it's the bottom? What if it reverses? Well, here's the thing. You can always sell and buy back later when momentum turns around, because you want to ride a trend. You could sell here, it lost support, and you say, okay, I'm selling here, but I can buy back in if this resistance level is broken, right? You give yourself something to work with because the whole thing is you want to ride a trend. If you're in a trade and it's failed, sell, move on. If you don't want to miss the bottom, that's an illusion because bottoms are slow to form. They'll give you multiple bites at the apple. Filecoin, you don't want to miss, quote unquote, the bottom. So for example, you could just wait till it breaks this lower high or wait till it breaks this lower high. And by doing that, you're allowing yourself to define your risk. If you took a long here on the break of 350, you would hold as long as it held above maybe 345 or something reasonably close by. The idea is that when it's dropping down, it can go much, much, much lower. But if it's going to reverse, if it's going back to $7, $8, $9, $10, $13, it needs to clear this level first. So give yourself permission to sell a failed trade and know that you can always buy back in if momentum reverses, if it can break some level, because then you're riding with the trend. All right. It's okay to sell a downtrend. Bottoms are slow to form and will give you multiple bites at the apple. This is the Trading Encyclopedia Daily Education series on my YouTube, Cheds Trading. I'm on Twitter at Big Cheds and Bitcoin Live. Thank you, folks. Talk to you soon. Big Cheds out.